Welcome to Aha Math and Science. Before I started the video, I just want to thank everyone who has been watching this channel for your support. Really kind of give me the motivation to continue make good videos and then share my analysis with you. So the market is very complex. So the goal of this channel is really try to kind of do some objective analysis of the market data and then share this analysis with you guys. And I think as a participant in the market, it's very important to be kind of have own independent thinking, and also more importantly to be kind of open-minded, and the technical analysis is never kind of 100%. So make sure that you think about this analysis and then have your own kind of thinking, and then try to always kind of stay kind of open-minded. So feel free to leave your comments thoughts below in the comment section. And so without further ado, let's get started. So perhaps every investor, and maybe at every moment the big question on our mind is what's next, what's ahead for the market. And that's really kind of like not just like a very important question, and perhaps it's not easy to answer, right? Because really nobody knows. This is you're talking about like forecasting the future, but still looking at the history, we can always get a few sort of some idea of what may lie ahead. And in today's video, I think it's a really kind of interesting finding after I did the analysis. So let me share this analysis I found with you guys. So this is showing here is this weekly chart of the Dow Jones Transportation Average, DJT, as close of July 7th, 2023. So as you can see here from this chart, we had a really kind of dramatic, tumultuous 18 months since end of 2021. But if you look at actually the big picture, this is just one of these cycles. Yes, it is kind of like quite a lot of volatility for a year or so, and now it seems like kind of come back up, but still just one of these cycles. Specifically, I want to point out, as you see here, there are two other curves. This purple curve is the 50-week moving average, the 50-week moving average, and then this green curve is a 200-week moving average. And as you can see in this chart here, right here, somewhere in 2022, you can see the weekly chart just kind of cross over briefly below the 200-week moving average. Let's call this case 0. This is where we are currently in. This is our current cycle. Now you can see that the other cases that this actually happened, it does not happen a lot. So that's interesting and make the analysis kind of interesting. So case 1, that actually happened in 1998, 1999. And then we have case 2, which happened 2007, 2008. Now we did not include this period. This is because this is not just kind of briefly cross over the 200-week moving average. It is well below an event then for extensive period of time. So that's a separate category. So is this category here, well below the 200-week moving average for an extensive period of time. So the next one is this one. That's case 3, briefly, and then case 4, briefly, and then case 5, briefly. This one is not included because this is extensively below the 200-week moving average and for quite some time. We also did not include this one. As you can see, it's briefly below the 200-week moving average. This is because in this period of time, the 50-week moving average is below the 200-week moving average. So that's different from like all the other cases when actually the the 50-week moving average is above the 200-week moving average. So this is another kind of a category on its own. So now we have identified 6 cases in the 30-year history. So our current case is basically the case 0. And you note that in some of these cases, a big bear market follows, like in case 1. So the market topped at here. Then you have a big bear market, and for quite some time. And then you also have case 2. The market topped again. Then you have a big bear market. And then you also have case 5. The market topped right here. You have a bear market, but it's really kind of like a very quick, rapid, bear market, and then quickly it recovered. That was during the pandemic in 2020. And then you also have 2 other cases where we did not have a bear market. That's case 3. That's actually the beginning of a long cycle, just kind of starting this bull market. And then case 4, which also did not have an immediate bear market, but a few years later, we have a big correction, then another bear market. So these are the statistics, because there's only that few cases that we just need to focus on. Let's look at each of these carefully. So in case 1, that was during 1998, 1999. As you can see from the top to the bottom, 25 weeks. So it's about half a year. And then the market kind of started to recover. And that's 30 weeks to get to this high here. This is actually a new high because it was higher than this previous high. And then we have a long, extensive bear market. So new high first, then big bear market. Next case, 2007, 2008. So from the top to the bottom is about 27 weeks. Then the market started to recover. And it took about 19 weeks to actually get to a new high. That was a new high. It's higher than the high here. And then we had a big bear market. It's not as kind of like in terms of duration, it's not as long as the 2000 bear market, but the drop was also pretty big. It is a big bear market. So new high first, then big bear market. The next one is 2011. So for this one, you can see the top to the bottom is very kind of short. It's only 3 months, 12 weeks. And then from the bottom, it started to recover. Obviously, we did not have a kind of immediate bear market. The bear market is several years later at least. And you can see it takes a long time for the market to recover, 66 weeks, and then it actually made a new high. 2015, similar to the 2011, no immediate bear market. It's going to be several years later. But from the top to the bottom, it's a long time. It's 55 weeks. It's a slowly grinding downward. Then another 47 weeks, almost equal time to kind of recover and then made a new high. So this one, again, no immediate bear markets. So I guess you can see clearly the weekly chart crossed over the 200-week moving average right here. And then the next one is a 2018-2020 case. From the top to the bottom, very quick, 14 weeks. And then suddenly recover. But it was not able to make a new high. Right here, the market topped again. That's in early 2020. A new bear market, a very quick bear market. So no new high, then bear market. So the recovery took more than 1 year, 56 weeks, still no new high. And then the market topped. That's also a very interesting cycle. And then that's the current, the next one is the current one. The current cycle, you can see from the top to the bottom is 47 weeks, almost like a year. So the top was kind of in November 2021. The bottom was in October 2022. Now we're kind of in this recovery phase. So this high is still kind of the high here. It's higher than here, so it's still marching high, but no new high yet because still below the high here, and it's already 40 weeks. So the question is, what's next? What's really ahead? Right? That's the question we try to answer. Now, there's a lot of information here and we want to actually summarize all this information in a table here. So we have seen like 6 cases, including the current one. So for the 5 cases, the results here. So the first thing we know is like the weeks from high to low, so that's the first column. The next one is the weeks to new high. Now this current one, we don't have a new high yet. And then among these 5 cases, 4 of them actually had a new high before the bear market happened, before the next bear market. And the only 1 case, there's no new high. And among these 5 cases, as you can see, 3 cases had a bear market, and 2 cases, no bear market, no immediate bear market. Bear market will be at least several years later. Here, I'm counting that from 2011 to the next big correction, that's 4 years. From 2015 to the next big correction, that was happening in 2018, that's also like more than 3 years later. And this one, the weeks to the bear market, is the same as the weeks to the new high, because when the new high made, the bear market started. Here, there's no new high, and that like 56 weeks later, the market entered into the bear market. So that's the information here. So the first conclusion is the chance of having bear market afterwards is 60%. This is basic from this data here. Do we have a bear market? 3 out of 5. So that's 60%. No bear market, no immediate bear market, 40%. These are the 2 cases here. Conclusion 2. The chance of having new high before a bear market is 80%, because in these 5 cases, 4 of the cases made a new high before the next bear market. Only this one, no new high, and then another bear market happened. So that's 1 out of 5. So no new high, then a bear market follows. That's 20%. So these are the conclusions we can draw from this table. So what is really likely for the current cycle? That's the, I guess, really kind of interesting question we want to answer. So the first thing we can say is new highs more likely than not before the next bear market, because of this 80% probability. So it is more likely than not. So we could see a new high, then maybe we see the next bear market, because that's 80%. And the next one we want to actually point out is, look at this recovery. It's not 40 weeks. We haven't seen a new high yet. And that's kind of similar to these 2 other cases, the 2011 and 2015. In other words, it's a long kind of grinding upward process. So similar to the 2011, 2015 cycles, we are slowly grinding higher. A lot of investors are still kind of skeptical of the rallies. So that actually sometimes on the contrarian kind of view, it's actually a positive thing for the market. So we are kind of similar to this case. And in other words, from this process, we can conclude that unlike these 2 big bear markets, when you can see like less than one takes only like 19 weeks, another one took like 30 weeks, the market already made a new high. But we haven't seen a new high yet, even 40 weeks later. So a lot of investors are skeptical of the rallies we are seeing now. And then another information we point out is, you can see how long it takes from the high to the low. That's 47 weeks. So it's really only comparable to this other case, which is the 2015, which is all the 55 weeks. In other words, all the other drops are very quick. Pretty much, basically, all investors are really kind of like knows like, oh, situation is really bad. But this process here are similar, so there's a lot of divergence among investors. But this grinding process, is like almost takes 1 year for the market to kind of grind downward. That basically means, some investors eventually kind of lose, patience after a year of grinding downward. So eventually, those investors kind of give up, perhaps a lot of them. So that basically means, maybe that's basically kind of similar message. Investors know that's why causing the investors are become skeptical, because they already kind of close the position and stay out of the market, and now they are kind of remain skeptical. So that's another sort of argument that we may not see a bear market, immediately, because this is very different from these two other cases, the 1998 and the 2007 cases. So with that, we conclude that, at least from my analysis, that our current case 0, is very similar to the 2015 case, which is the case 4 here. So in 2015, you can see, the market eventually actually recovered, made a new high. But then a few years later, you have another big correction, another bear market. And this bear market actually basically erased all the gains, over these 3 years. And then retested the low at here. So this is basically kind of the conclusion we can draw, for what may be ahead, for our current cycle. And again, this is just kind of looking at the Dow Jones Transportation Average and see what that is doing. But this transportation average is a very important economic indicator. So I think, the analysis in this video is certainly kind of interesting. So I hope you have kind of enjoyed, this video and found the information at least kind of intriguing, and make sure to kind of, have your own thinking and maybe have your own opinions, and feel free to leave your comments below. So again, your support means a lot to this channel. So please do not forget to click the like button and also to subscribe to our channel if you have not done that. Thanks a lot for watching.